Hey, good afternoon, everyone. This is Trader Tim from eMiniMind. Today is the 12th of January, Thursday, 2017. And in this video, I wanted to talk about a scenario that happens quite a bit across all different time frames. And that is when we're looking at a Fibonacci retracement, we have a setup take place where the market comes down, touches the 50%, and starts to move towards its target. But before we get all the way to the negative 23, the market then pulls back to another 50% retracement. And the thing to look for in terms of whether or not the second or third retracement after the first one has traded, things to look for to kind of give some confirmation or validation, if you will. One is if we drop from the high to low, the short, the opposing, did that break. And so I like to see the opposing setup break before the market starts to pull back. And the next thing is, did we break a recent swing high? In this case, because it's a long setup. And the answer is yes, we did. So drawing up the next 50% retracement, oftentimes the larger one below us and the smaller one kind of within the larger both have targets that take us up very close to the same area within about 5 points. So that's a good sign. It's okay for the market to kind of stair step its way up to a target. And you'll notice that this hammer that we had today pulled back, touched the 50, and those lows were just below these recent lows about a month ago in December. So as soon as the market broke down below those lows, the bulls stepped in, saw that as a buying opportunity, and pushed the market back up. So from here, I'd be looking for us to break today's high tomorrow. So the current trading hours only high for Thursday is a 22.67.25. I would look for that to be broken either tomorrow, Friday, or next week. And if we can break that and then break this 22.77 high, then I would look for the market to kind of move up fairly in these big body candles, having broken a couple of highs up here along with the hammer from today. So the same scenario you'll see on smaller time frames as well. And so whether it's a 5-minute, 15-minute, 5/12 tick chart, the daily chart, just be sure to look at the opposing and determine if that 61.8 of the opposing is broken, and then see if the swing high or swing low is also taken out. And those are two kind of confirming indications that the pullback is then healthy, because if those two don't occur, if we just come up to the opposing and start to sell off, well, now you have longs at the retracement long and shorts entering at the 50% retracement short, and so you've got bulls and bears kind of intertwining in a tighter range, a tighter window, and that can lead to some indecision and some chop and some back and forth, and that's not a market environment that you want to be participating in if you're trying to catch longer term moves. So that's a scenario I see quite a bit, and just something I wanted to talk about today. If you have other questions, feel free to shoot me an email, tim@eminimind.com. Thanks everyone. Have a great weekend.